Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq 100 weekly performance. We'll also take a check on earnings as we're just about halfway through the season. Ryan, it's great to see you as always. And the question is, will that follow through we saw in July with the Nasdaq 100 continue into August?
Yeah, that's the $1 million question here. Looking over the past week, we saw QQQM and QQQ have a solid week, up 6.75% each, outperforming the S&P 500, which is up 4.37%, and the S&P 500 value up 2.25%. To your point, Jill, July was the best month for QQQ since April of 2020. It was up 12.58%, and I think investors started to begin taking advantage of Nasdaq 100 valuations that were much more in line with kind of 15, 20-year averages after the challenging performance environment that we saw to start 2022. And it's really persisted through earnings season, as it's been kind of not as negative as feared. As we were talking last week, almost in real time, we saw the markets jump during Fed Chairman Powell's press conference. Wednesday's performance was the big day of the last 5 trading days, and QQQ finished that session higher by 4.22%. We also saw a strong performance day on Friday after Apple and Amazon reported earnings the previous night. Apple showed iPhone and iPad resiliency in the quarter. That's amid sort of this challenging environment for smartphone sales, and showing that it's largely navigating supply chain issues that are driven by China. The stock was higher by 3.28% on Friday. And then as you look at Amazon, Amazon provided revenue guidance expected to be between 125 billion and 130 billion. That represents anywhere from 13 to 17% growth versus third quarter of 2021. So kind of showing the return to double-digit year-over-year revenue growth after Q2 only saw 7% year-over-year revenue growth. But strong results in AWS, $19.7 billion in revenue. That topped analyst expectations. All of this helped drive the stock higher by 10.36% for the session.
And let's take a look at your next chart here with the sectors that were leading the way for QQQ.
Yeah, so in terms of where that outperformance versus SPY or S&P 500 index was derived, overweight within the technology sector was the largest contributor to performance. The sector was up 7.24% in QQQ. Consumer discretionary was the next largest contributor and was the best performing sector in QQQ, up over 13% for the week, certainly helped by that big Amazon move on Friday. And all 7 sectors in QQQ finished in positive territory. The S&P, all but one sector finished in positive territory, and it was healthcare that bucked the trend.
And finally, Ryan, we're just over the halfway point when it comes to earnings season. I feel like the trend has been not as bad as expected. What are some other trends that you've picked up on?
No, I mean, that's really it, right? And today we see QQQ up by over 2.7% after Moderna and PayPal both reported very solid results. I mean, today alone, Moderna is up over 17%, reported 4.75 billion in revenue. That beat analyst expectations. The company announced a $3 billion buyback, and Moderna, had noted that it's expecting better Q4 sales than Q3, really based on expected approvals for its new COVID-19 vaccines. And beyond that, the company reiterated $21 billion in advanced purchase orders for the vaccine for the year. And then you have PayPal today up 9.3%, positive reaction from the street after the company noted that the activist investor Elliott Investment Management is one of their biggest shareholders with a $2 billion stake. The company noted that it's going to save over $900 million this year and $1.3 billion next year. Also announced a $15 billion share buyback. So a lot of people kind of pointed to a more focused strategy driven by maybe the activist hand within the stock. But I think overall, you look at Nasdaq 100 earnings estimates, and they've come down a bit. But full year earnings per share estimates as of today stand at 549.31 per share. That represents over 26% growth from 2021. And recall, 2021 brought EPS of $435.46 per share, which was 27% earnings growth from 2020. So, as the year has progressed and over the past couple of months, we've seen earnings estimates come down a little bit from the high that we saw in early February of over 570. But as you said earlier in the segment, the theme of less bad seems to continue here. And next week, I would expect most of the market's attention to be on the July CPI figure. That's going to be released on Wednesday, so we'll have plenty of talk about again. Expectations is an 8.8% year-over-year increase. That's down from the 9.1% increase that we saw in the June data.
All right, Ryan, appreciate it. As always, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.